San Diego tends to rank among the country's most consistent apartment sector performers. Looking at today's stats, the story is pretty much business as usual, but let's check in to explore exactly what that means. Welcome to Apartment Market Dynamics from MPF Research. I'm Greg Willett.
And I'm Cameron McIntosh. It's tough to build in San Diego, so this metro rarely gets a really big block of new supply. Annual apartment completions during this market cycle have tended to run between 2,000 and 4,000 units a year. 2016's tally of 3,622 units delivered falls right within the normal zone. While San Diego has a slow growth economy, it doesn't take a lot of growth to create apartment demand that equals the muted completion volume, particularly when expensive home prices limit loss of renters to purchase. As with deliveries, recent demand has tended to fall in the range of 2,000 to 4,000 units annually. Absorption during calendar year 2016 registered at 4,127 units.
Nearly identical supply and demand volumes obviously yield stable occupancy. An occupancy figure between 96 and 97% is routine here, thus there's no surprise in the current rate of 96.9%.
The performance metric that moves the most in San Diego is rent growth. Pricing shifts more than you might expect, given just how stable nearly every other indicator tends to be. This is a spot where operator sentiment can really move the performance results.
Right now, that operator sentiment appears really solid, although confidence probably isn't quite where it was a little bit earlier in the cycle. Annual rent growth for new leases is at an even 5%. That's above the long-term norm, but we did get up to 7 to 8% rent growth for a while in mid-2015 to early 2016. Annual rent growth of 4 to 5% is seen across the Class A, Class B, and Class C product segments. There's a little bit more variation if you break the numbers down by neighborhood. Annual change is held at 2 to 3% in some submarkets, but reaches up to 7 to 8% in others.
Ongoing apartment construction in San Diego registers at 8,913 units. Properties scheduled to finish in 2017 total 5,757 units. That's the biggest block of annual deliveries seen going all the way back to the 2001-2002 timeframe. But still, it's not a figure that's way over the top.
We think San Diego's apartment occupancy rate should ease a little bit from where it is right now, while still ending up in that normal range of 96 to 97%. Rent growth near 4% seems likely. That's a solid showing, even if it is mildly below today's rent inflation pace.
That's our look at San Diego's multifamily sector. Not surprisingly, we're calling for basically more of the same in one of the country's comparatively stable environments. I'm Cameron McIntosh, he's Greg Willett, and thanks for watching Apartment Market Dynamics from MPF Research.
Want more? Go deeper with MPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, MPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.